Hello and welcome back to another video. In today's video, we're going to be talking everything to do with network effects and the network effects of Bitcoin that we are seeing in terms of how that correlates to its growth and everything about the growing number of users on the Bitcoin network. But before we jump into today's topic, as always, if you have any questions or comments, drop them in the comment section below. Make sure you hit the subscribe button, hit the bell notifications, and give this video a thumbs up to make sure that the good word gets spread with the algorithm. It's super helpful, so we would appreciate you dropping a like below. So, for today's video, we are looking at the topic of network effects. And in short, network effects can kind of be summed up by Metcalfe's law, which basically states that the value of a network is proportional to the square of the number of connected users to the system or the network. So that, in essence, the more users a network has, the more valuable that it is. And we're going to look at some examples below. But as we think about, thinking about how things have been done traditionally over the past few hundred years, what most of the network structures have looked like is really a top-down hierarchical network structure. So what that means is we've typically had network structures where we have a king or a president or a tsar, and the network has been a top-down hierarchical structure. And we see this with currencies as well, as they are in the world today. Most thinking of the Great British Pound as an extreme example here, but having the king or the queen literally be the face of the currency and the hierarchical network that has been constructed around that currency and that mode of operating is a perfect example of a hierarchical network. And hierarchical networks obviously filter through to one central point at the top of them being a king or a queen or a president, etc. And that is the definition of centralization. And this system is somewhat the antithesis of what Bitcoin and decentralized network structures are all about. So obviously with a top-down approach, you've got a king or a queen at the top, and that filters down to the rest of the populace. But with a decentralized network, what you're doing is you are decentralizing mainly the power structure of a hierarchical network, and you're decentralizing the way in which value and money is transferred between the people on the network. So decentralization, software encoded rules, ubiquity, and resiliency being some of the key characteristics of decentralized networks like Bitcoin. So coming back to think about what we mean here by, more users equals more value. Metcalfe's law, and the best way to kind of think about this is with the telephone network in the early days of the telephone. So obviously, if one person has a telephone and nobody else has a telephone, the telephone network is not very valuable because you've got no one to call and no one can call you. But slowly but surely, as the number of people who have telephones continues to grow, the more valuable the network becomes. If 3 of your friends have telephones, you can communicate and call your 3 friends, and they can all call you, but also call each other. So the amount of value that that network has as some of your initial friend group or other people begin to purchase telephones, the more valuable the entire network has as a whole. And that begins to multiply and expand exponentially. And that's where we get the definition of Metcalfe's law. And obviously, once hundreds and thousands and millions of people have telephones, the network itself becomes extremely valuable because you can essentially, or in theory, connect to any other person who has a telephone. And that has the ability to remove a lot of friction and also creates economic advantages or incentives when it comes to you being able to contact almost anybody else on the planet at this point with something like the telephone network, where there's over 7 billion people who own a telephone. So this is kind of a visual representation of what we're talking about here today with network effects and how they apply to Bitcoin. So again, this is just applying Bitcoin to the above visual of, when only a small number of people are using Bitcoin, the value of the network is inherently less than when more and more people begin to use it. And we're going to see how this growth has been happening over the past 15 years. But obviously, the more people that are transacting and using Bitcoin, the more valuable the network becomes in an exponential fashion. And again, this is just a quick visual to represent the fact that value increases as the number of users or nodes on the network increases. So just a different way to visualize this, we're talking about as this curve begins to increase with the number of users on the network, the more valuable it becomes. So thinking about Bitcoin as a network also allows us to think about the network effects that have been enjoyed by other large companies over the past couple of decades and how we're seeing that begin to happen with Bitcoin as well. So what we're looking at here is the largest companies in the world and how many of these companies like Apple, Microsoft, Google, Amazon, Facebook, etc. have been the benefactors of the network effect from a technology standpoint, and how the face of the largest companies in the world kind of changed from 2004 to 2021 with the democratization of technology and how these companies leverage technology to create network effects in order to grow and ultimately become the biggest companies in the world. This is a snapshot of essentially the same list but up to date for 2024 with the largest assets by market cap here in the world. And obviously we've got gold sitting at number one here with a 13 trillion market cap, but then we've got many of these same companies, Apple, Microsoft, Google, Amazon, Nvidia, Facebook, or Meta. These are the technology companies that leverage network effects to scale and ultimately become literally the most valuable companies and assets in the world. And obviously we've got Bitcoin here on this list, currently sitting at number 11 with a $769 billion market cap. This will obviously continue to increase, but we've even seen Bitcoin at 1.2 trillion before in the previous bull cycle. And as more users and people continue to use the network and become a part of it, the more valuable this continues to become due to the network effects that have played out for many of these other companies over the past couple of decades as well. So very interesting to think about how far Bitcoin has come already, particularly given the fact that I'm almost certain Bitcoin is the youngest asset on this entire list. All the other companies and or assets are older than Bitcoin. So Bitcoin has had a 15-year trajectory to get to this point. Tesla's only a few years older than Bitcoin, but creating almost $1 trillion worth of value in that short time period, it just bodes extremely well for how much growth and how much value we're going to continue to see with the Bitcoin network, especially with the supply shock events like the halving happening every 4 years, with the next one due to happen in just a few months, and how that will trigger even more demand for this asset as it continues to grow. So next, what we're going to look at is the adoption of technology in the US. And we've looked at this chart before in previous videos, but this is also extremely interesting to see, especially when we remember the other graphic we looked at a moment ago, where we know that the value of the network increases exponentially as the number of users increases. So this just shows us how early we really are here. And this map is showing us the adoption of technology in the US for all of these other major technologies over the past 120 years. So back in the early days, what we obviously have are, the adoption of the telephone, the adoption of the light bulb, the adoption of the automobile. And we can see how the adoption rate trends over time. And as more and more people begin to adopt it, what we're seeing is like the S curve essentially of the adoption rate. Now, the other very interesting thing to note here is that obviously with some of these older technologies like the telephone, the light bulb, the automobile, we can see that there's quite a steady trajectory in terms of growth. with some of these older technology adoption rates. But as we move towards the 80s, the 90s, and the 2000s, the adoption rate is much more rapid in terms of its acceleration, in terms of adoption. So things like the computer, the smartphone, the internet, HD televisions, the smartphone, you can see that these adoption rates are much more sharp than the adoption rates of the technologies of the early 1900s. And it seems to be, that progression seems to happen over the course of the past 100 years. And almost all of these new technologies have been experiencing faster and faster adoption rates when it comes to the amount of people who have adopted them in a short period of time. So obviously we are here with Bitcoin. We are still extremely early in the trajectory and the life cycle of this asset, of this technology, and of this network. So will we see a similar trajectory where we begin to see an S-curve that is extremely sharp, as we did with mobile, as we did with tablets, as we did with the internet? We obviously can't predict the future, but I think there's a very common trend here as we go from the early 1900s onwards as to how Bitcoin could experience extremely rapid levels of adoption over the next few years, particularly when we think about those network effects that we're mentioning in this video. So what we've seen here with adoption, we're going to look at some of the different metrics for adoption with Bitcoin. Obviously, the number of active Bitcoin addresses has been steadily increasing over the past 15 years since its inception. We definitely see these spikes in terms of active addresses in correlation with market cycles. So we've got peaks and troughs, but these peaks really do tend to happen around the same time as a market top, as we saw with around after the 2016 halving and going towards the next cycle here. Then we saw another top here in 2020, 2021, with active addresses topping out around the time of the previous bull cycle high. And we're continuing to see, a bit of a retracement, but continued growth in general for Bitcoin addresses over time. What we've got a representation of here is Bitcoin addresses holding certain amounts of Bitcoin over time as well. So this top line in green is showing us wallets or addresses that are holding more than 0.01 Bitcoin, and obviously that has been steadily increasing year over year. We don't have updated figures for 2024 yet, so they are just by default the same as 2023. These wallets in yellow, or these addresses, are holding at least 0.1 Bitcoin in each wallet, and then this line here in red at the bottom are wallet addresses holding more than one full Bitcoin. So we hit a very big milestone in 2023 with more than 1 million addresses holding more than one full Bitcoin. So again, a steady increase in the amount of addresses holding Bitcoin over time is another indicator that we're continuing to see growth in the network, growth in the amount of users, and growth in the overall value. Similarly with hash rate, again, hash rate is, in simple terms, the amount of mining power that is going into the mining of Bitcoin with all of the Bitcoin miners. So again, a steady increase over time, and then, quite a significant increase since 2020 in terms of hash power, the amount of energy and work that is being expended in order to secure the Bitcoin network, but also the amount of energy that's going into the mining process in order to create new Bitcoin year over year and cycle over cycle. So again, these are a lot of the indicators that are showing us the continued growth of the network in terms of users, in terms of the overall value. And the final thing that we're going to look at is obviously the amount of transactions per day. So this is the amount of users and people that are sending and receiving transactions on a daily basis mapped against the price of Bitcoin. So it's a logarithmic chart, but the blue line represents the amount of transactions per day, and the black line represents the price of Bitcoin over time. And somewhat of a correlation here as we see as the amount of transactions and people using the network continues to grow with the blue line, so too does the value of Bitcoin itself in terms of price and in terms of in terms of that price growth and accumulation over time. So very interesting to think about the overall growth of the network here for Bitcoin, and how that correlates to the network effects, and just how early we really are in terms of adoption. So if we are seeing the correlation here between, all of these different metrics where we've got more and more people transacting every day, we've got more miners and more hash power securing the network, we've got more people holding Bitcoin in their addresses year over year, and we've got more active addresses that are continuing to grow. Where does this put us in 5 to 10 years from now? Where do the network effects take us? Where do the exponential returns and growth get us to in that period of time? So again, a little bit of a thought experiment, but I think it just goes to show how early we really are in the trajectory of decentralized assets and Bitcoin being a clear leader in the space, and thinking about, once again, how the network and the value of the entire Bitcoin network is proportional to the square number of users connected and using it, and how that's going to play out over the next few years. Definitely some food for thought. Let us know what you think about everything to do with network effects and the growth of the Bitcoin network in the comments below. If you enjoy these videos, as always, please don't hesitate to drop a thumbs up on it. Make sure that you're subscribed, and we'll catch you in the next one.